Welcome back. You're tuned in to Budget Breakfast here on CNBC TV 18. Well, as promised, let's get straight to trade setup. Well, Mangalam, the market mood has been a little bit subdued. Let's get straight to the action.
Let's get straight to the action. It's one of those days, where it hasn't been spoken about the budget so much this time around. And that's because the mood of the street is like that. If you look at it, the Nifty, yes, for all practical purposes, did hit a record high in January. But from there itself, it's down about 4%. The Nifty Bank, which has been doing well, is down just about 1.5%. The problem point of the market is the IT index, which is down about 17%, and the big weight Reliance as well, which is down about 13% from the highs. And that's not all. The rupee is something that we're looking at in the broader markets. The mid-cap index is 5% of its lifetime highs. The small-cap index in the Nifty Next 50 down 14 to 13%, with more stocks, way more stocks down anywhere between 20, 30, and some even 40%. It's the rupee, which is a problem. Since the last budget, the rupee is down 5.5%, and the Nifty in dollar terms is actually down 6%. So that is a worry that we need to monitor going forward. And what the budget will have in terms of stemming the FII outflows is something that we will track as well, because all of 2025, the FII sold nearly 3 lakh crore in the cash market, and in January itself, they've sold a tenth of that, a little more than that, 41,000 crores. So all these factors actually should play on the mind of the street and the budget makers.
Well, that's right, Mangalam. I'm looking at a couple of other factors that are playing out. So, if you just look at it, the kind of decline that we have seen in precious metals, well, that's actually not so bad, because over the weekend you had gold as well as silver that came off drastically. I say that it's not so bad because, in fact, we have been seeing that a lot of interest, and because of the recency bias, there's a lot of interest that's moved to gold as well as silver. So it may not be such a bad aspect. But the FIs, as you said, they have been underweight in the cash market, and in the future space, getting into the event, they've added short positions with, in percentage terms, the short positioning at around 88%. And if we pull up the absolute number, it's at around 1.9 lakh contracts on the short side. So FIs getting into this event extremely net short, while the clients there on the opposite side, they're net long at around 1.3 lakh contracts. Not just the futures market. If you look at the options data as well, that's telling you the kind of writing we have seen on calls in comparison to puts. So safe to say that the FIs, they're extremely defensive getting into this event. But Mangalam, tell us about some of the key market triggers that you're looking at.
Yeah, beyond the budget is something that we will be tracking very closely, right? All eyes will be on what the finance minister says. But if you look at, some of the big triggers for the market, so far, the earnings season hasn't brought out big negative surprise. So there is a likely pickup that is expected in the second half of this earnings. And rural and urban consumption are at an inflection point. That's the sense that we get from all the numbers that have come by so far, and all the data points and all the actions that the government has taken as well. Then there is this uncertainty around Trump, tariff, and commodities. You did speak about how precious metals have come off the highs. So all these things will also weigh on the market. And above and beyond all of this, the very next week, we will have the RBI policy. Is there a rate cut coming or not? And the strategy of the new Federal Reserve chairman. All these factors beyond the budget will be important triggers for the markets to watch. But all eyes on the FM now here.
Well, that's right. All eyes on the FM. And I'll tell you what, the street will be wanting this capital expenditure push to continue. So the ballpark range we're working with is around a 10 to around 11% increase in terms of Capex expenditure. They'll want the finance minister to continue walking the talk and, in fact, going ahead with that. And also, the feedback that I've got is a little bit of a slip on the fiscal deficit. That'll be par for the course, given that we want to revive the nominal GDP. So that's going to be the important aspect with regard to the key number to track. Otherwise, something for the stock markets. Remember, Mangalam, as you said, they've been selling in the cash market, the FIs. They're net short in index futures as well. And India has underperformed in comparison to the globe. So something in there, some tinkering of LTCG, STCG, maybe STT, put in something out there that revives sentiment both on ground as well as for market enthusiasts. But let's get to the levels to track that, Mangalam.
Indeed, Nigel. The market enthusiasts will be very happy if there is some sort of sop given to them in the form of tax, because if you look at the Nifty itself, it's down about 1,000 points from its record high, but it's flitting between, the 200-day moving average, the 20-day moving average. So all these factors we'll have to watch out for. 25,200 is an important support on the way down, and on the way up, you have the 20-day moving average at 25,635, and beyond that is the 50-day moving average as well. The lows on the Nifty from Jan 21 and Jan 27, just shy of that 25,000 mark, extremely crucial to support if the market were to sell off post-budget. And were the markets to move higher post the budget and cross the 20 and the 50-day moving average, all eyes will be on the previous record high, which is about 1,000 points from here, 26,373. Is the market going to go there or not? Well, Nigel, you've done some interesting analysis on the Nifty and the budget.
Well, Mangalam, the mood is subdued, which actually may not be such a bad thing. Because in the past, when we have seen that the markets pull back close to around 3% getting into the event, it's not been such a bad thing, just going by the returns that we've seen 1 month later. So maybe not such a bad omen to go into this event, with the FI short, the FI selling in the cash market, and the mood rather subdued. This time around, we're down close to 3% a month ahead of the budget. What holds for us post? It's going to be interesting. But if the markets need to move around, you have the big boy ITC that's always on your radar. What are you expecting this time around?
Well, the budget has to boil down to one stock. It eventually ends up being ITC, and this time around more so because we know the price tax hike that has come by. The stock is down 20% in January due to the big tax hike announced in tobacco on January 1st itself. So whether that is reversed or not, or is there any sort of SOP that comes in for ITC or not, is something that we will be tracking very, very closely. Why? Because this is a stock that moves anywhere between 5 to 8 and sometimes 11% on budget day as well, between the highs and lows. So we'll be monitoring the fine print very closely on account of whether there is any sort of reversal or revision in tax. If not, then the stock continues to be unabated and go down. But if yes, then it could be a big, big positive. But that's about, the trade setup that we're looking at in terms of going into the budget, what the market's expecting, what the finance minister is likely to do, and what the positioning of the FIIs are as well, Nigel.
What would you stick your neck out, Mangalam, and say that is it going to be a little bit of a positive surprise, or do you think it's not going to be a very big event?
Well, given the government's, trajectory so far, no tinkering is something that the street would like. Maybe it could be a positive surprise, largely because everything else is so negative, right? Everyone's worried about the rupee, everyone's worried about the market, the FI selling, all these factors. So let's see. I'm keeping my fingers crossed, and I hope everyone who's watching CNBC TV 18 and everywhere else, I don't think anyone's watching it anywhere else.
All right, Mangalam, but I think we have given market setup. Let's get in our very own Hormaz, who's joining in to help us out with a quick look at all those stocks that will be reacting to news today. Hormaz, let's get you in.
Well, it's the big day, right? And we'll be awaiting what the finance minister is going to announce.
Right.
But more than that, the usual suspects that should be on the radar as far the budget speech is concerned. And the fact is that you'll have to watch out for the big names, right? The defense space, of course, because of the defense allocation, the railway names are the kind of stocks that you'll be announcing there, and so on and so forth. But other than that, there are a lot of other announcements as well. There were earnings that came in. And look at Sun Pharma's numbers as well that came in on Friday. They were better than expectations. It was the India business that led the growth. The generic sales in the global markets were also better. They were in line with expectations. Margins expanded. So the stock did well. It should be in focus. Bajaj Auto's numbers were in line with expectations as well. The balance sheet continues to remain healthy. That's the big takeaway. The brokerages, though, continue to remain a little divided on the stock. Bank of Baroda's numbers, nothing much to write home about there. It was a subdued quarter for them. Asset quality has not seen any major significant improvement either on a sequential basis. Now, if you take a look at a similar result from Cholamandalam as well, the core income was higher, 24%. Yes, but the asset quality has not seen any improvement. In fact, it has seen an even more deterioration, ever so slightly, but a deterioration nonetheless when compared to the September quarter. Even the provisions have gone up to as much as 3,000 crores for the ECL stage 3. Now, ESAF Small Finance Bank is one name. The stock had reported a loss of over 200 crores last time. They have turned a profit this time. And more importantly, the asset quality has seen a very significant improvement as well compared to the same quarter, compared to the sequential quarter as well. As you spoke about defense names, a couple of defense names. Bharat Dynamics is one name reacting to results. Profit has halved from last year. Margins have seen an even sharper deterioration, so keep that on your radar. Other reactions, of course, CDSL, GSPL and other names. Silver, Hindustan Zinc should be on your radar. And of course, Ola Electric, and keep an eye out on BSE as well after the clearance to the NSE IPO.
We take that point, Hormaz. Thanks a lot for that. Speaking about BSE and NSE, don't worry, we will be there. We're speaking to those decision makers out there. But before